You're watching Wall Street Confidential on TheStreet.com TV, discussing the overall malaise in the market this morning. A big hangover after that service sector report showing contraction for the first time probably 7 years in that sector, Jim. I mean, the market is going even lower than yesterday.
Well, look, this is a market where you're going to see two things. Recession, rate cut. Recession, rate cut. Between every rate cut will be recession. And all the stocks that do poorly in a recession will get killed. This is a pattern that will continue for many months. People have to get ready. Every time the market is overbought by the S&P's oscillator, you can expect a gigantic sell-off because there'll be lots of data that signals recession. It might be ISM. It might be employment. It might be a large cap company disappointing. It might be commodity futures going down. But that's where we are. That's what happens in rate cuts. And what you're going to do is get a lot of people who believe that nothing good can come, no matter how good the rate cuts are. A lot of other people are just going to get whipsawed unless they understand and just say, okay, look, there will be an end to this recession someday, and I'm going to look through that valley. I've never been one to look through the valley. I've always been one who says that if you can avoid losses, loss avoidance is paramount. We're in a period where you need to be loss avoidance oriented after a rate cut, and before a rate cut, you got to be long.
When this recession is over, Jim, what are the stocks people will have wished they had owned during this time
well,
period?
Before the recession ends, you have to own retail and you have to own banks. So if you did what I recommended and sold off a little as we got really overbought, and I repeatedly drove that point home in realmoney.com yesterday, then I think you're set up to be able to buy on the way down after we get oversold. We're still so overbought, there really isn't anything to pick. I was still selling for actionalertsplus.com this morning. I still think that we have another 200, 300 points down. This is obviously the most, I said yesterday when we were down 100, that they're going to kill it again. Now, the next 100 to 200 points should be bought with the stuff that you sold the other day. I'm focused on Wachovia. Why Wachovia? Because word is out that they're going to cut their dividend. If they have to cut their dividend, the stock is going to get hammered like all the others that cut it and then come back to life. But it certainly would be a sale at this level, buy back at 30 if that were the case. I don't think it's the case, but that's the one people are saying is the most endangered right now.
All right, Jim, thank you so much on this market. And by the way, Whirlpool, not quite a recessionary stock there. I mean,
no, there's a company that was able to get a very good merger through the Justice Department that probably shouldn't have occurred, and also has tremendous Brazilian exposure, has been buying back stock, is a small cap company now. It's very well run.
And it is up today, an outlier today in the market. Thanks so much, Jim Cramer, on the malaise in this current market. You're watching Wall Street Confidential. Stay tuned.
That's your action point. Take advantage of it.